When you're looking at a company's financial statements, it can sometimes feel like there's this whole layer of expertise that's just sort of assumed.
Hmm.
Terms and figures pop up that, well, they clearly go beyond standard accounting.
Right.
Today, we're going to pull back the curtain a bit on one of those areas that might leave you scratching your head.
Mm.
How auditors use the work of, well, other experts.
Yeah.
Think of this as your backstage pass, maybe, to understanding a really crucial part of the audit process.
That's a good way to put it. And our goal in this deep dive is really to demystify when and why auditors bring in these specialists from other fields.
Exactly.
We want you, the listener, to understand what this reliance means for, how much trust you can place in the financial information companies are putting out there.
Because it's not just the numbers themselves.
No, it's about understanding the layers of scrutiny involved, and we're basing this discussion on excerpts from International Standard on Auditing 620. It's called Using the Work of an Auditor's Expert. Basically, the rulebook auditors use worldwide for this.
Okay, ISA 620. But, like you said, we're not going to get totally bogged down in the super technical jargon here.
Definitely not.
Our mission is to pull out the key insights and talk about them in a way that's clear, engaging, and really gives you a better handle on what's happening behind the scenes of a financial audit.
Sounds good.
Okay, so let's kick things off with the basics then. What exactly is an auditor's expert? What are we talking about?
Well, the official definition from ISA 620 is that an auditor's expert is an individual or maybe an organization possessing expertise in a field other than accounting or auditing. And the auditor uses their work to get what we call sufficient appropriate audit evidence.
Sufficient appropriate audit evidence.
So fundamentally, it's about bringing in specialist knowledge to help the auditor do their job properly.
Okay, that's the definition. But let's make it more concrete. For you listening, can you give some real-world examples? When might an auditor actually say, you know what, we need someone who really understands this specific thing?
Oh, yeah. There are quite a few common situations. Think about valuing really complex financial instruments.
Okay, like derivatives or something.
Exactly. They can be so intricate that even, experienced auditors might not have the deep specialist knowledge to really assess their fair value accurately.
Right.
Another big area is actuarial calculations. Things like pension obligations that involves a lot of forecasting, specialized statistical methods.
Definitely not standard accounting.
Not at all. Then you have things like environmental liabilities. Assessing the potential cost of cleaning up pollution, for instance, often needs environmental science expertise. Or just consider very specific industries. If you're auditing, say, an oil and gas company, understanding their reserves, how much is actually down there, might require a petroleum engineer.
So it's really about tapping into highly specialized knowledge, stuff that goes way beyond the typical auditor's skill set.
Precisely.
Now, I've also heard the term management's expert. How does that differ? Is it just another name for the same thing?
That's a really important distinction to make. Good question. A management's expert is someone whose expertise the company itself uses.
The company being audited.
Yes, exactly. They use that expert to help prepare their financial statements. For instance, a company might hire a geologist to estimate the value of their mineral deposits, right? And that number then feeds into their financial reports.
Got it.
But when we talk about an auditor's expert, we mean a specialist that the auditor brings in.
The auditor hires them.
Yes, to help them evaluate those financial statements that management prepared, possibly with the help of their own experts, like a separate layer of scrutiny.
Okay, that clears it up. So management uses their experts. The auditor might bring in their own expert to check that work, or maybe look at areas the auditor just isn't equipped to assess themselves.
That's the idea.
So why? What's the core reason an auditor would go to the extra effort and probably expense of bringing in an outside expert? What's the main driver?
Well, the fundamental reason really boils down to the sheer complexity and specialization you find in some parts of financial reporting today.
It's just getting more complex.
It really is. Auditors need to form an opinion. Are these financial statements fairly presented? To do that, they need to gather, as we said, sufficient appropriate audit evidence.
Right.
And in areas where the subject matter is highly complex or needs very specific expertise, the audit team just doesn't have.
Well, bringing in an expert is often the most effective way.
Yeah.
Sometimes it's the only way to get that necessary evidence.
Okay, so the expert provides crucial evidence, but It's not like the auditor just delegates that piece of the audit and says, okay, the expert signed off, we're good. Or
Oh, absolutely not. That's a really, really critical point.
what responsibility does the auditor still hold?
The auditor retains sole responsibility for the audit opinion. Full stop.
Sole responsibility.
Using an expert does not reduce that responsibility one bit. The auditor needs to have a sufficient understanding of the expert's field.
Even if they aren't an expert themselves. Exactly. Not to become a second expert, but enough to make informed judgments, like when is an expert actually needed? And then, crucially, to evaluate whether the work the expert did do is adequate and reliable for the audit's purposes.
Okay, so the auditor needs enough context. How do they make that initial call? What's the thinking process behind deciding, right, this valuation or this calculation, it's beyond our team's core expertise. We need to bring someone in.
There are several factors they'll weigh up. The nature and complexity of the specific issue is obviously a primary one.
How tricky is it?
Yeah, is it inherently difficult to grasp without that specialized knowledge? They also have to assess the risk of material misstatement in that particular area.
Risk is always key in auditing.
Always. If there's a higher risk that things could be wrong or misstated because of the complexity, well, an expert's input might be pretty essential to get the comfort needed.
Makes sense.
And finally, they look at what other audit evidence is available. Can they get sufficient, reliable evidence through their own standard audit procedures? If not, then an expert's work might be the key to filling that gap.
Okay, so they've weighed it up. They've decided, yes, we need an expert.
Yeah.
What happens next? Is it just like picking up the phone and saying, hey, can you look at this? Or is it more formal?
Oh, it's much more structured than that. The auditor needs to carefully plan the nature, the timing, and the extent of their own audit procedures that relate to the expert's work.
Their own procedures relating to the expert.
Correct. This involves thinking about several angles. First, the specific nature of the matter the expert is going to be working on. Second, the auditor's own assessment of the risks of material misstatement in that area.
Right, the risk again.
Third, how significant is this expert's work going to be in the grand scheme of the whole audit? Is it a minor point or a huge component?
Okay.
They'll also think about any prior experience they might have had with this particular expert or firm.
So if they've used them before.
Exactly. And whether that expert is subject to the audit firm's own quality management system. Sometimes experts can be internal to the firm's network, sometimes completely external.
Interesting. So past experience counts. Now, this is expert. They're providing potentially critical information. How does the auditor satisfy themselves that this person or this organization is actually, qualified, competent, and just as importantly, that they're objective, not biased?
Yeah, this is absolutely crucial. The auditor's evaluation of the expert's competence, capabilities, and objectivity is paramount. It's a core part of their responsibility.
So how do they check that?
They'll look at things like the expert's professional certifications, any licenses they hold, what's their reputation like within their field.
Their standing.
Exactly. Their track record, their experience, the resources they have available. And very importantly, they need to actively consider and look for any potential conflicts of interest.
Conflicts of interest, like what?
Well, anything that could potentially compromise their objectivity. Could their findings be swayed by a financial interest in the company or maybe a close relationship with management? The auditor needs to probe that.
Right. You definitely wouldn't want an expert whose pay somehow depended on finding a certain valuation, for example.
Absolutely not. That would undermine the whole point.
Okay. So the auditor has done their homework on the expert, checked their qualifications, considered objectivity. Now, how do they even start to understand the expert's findings if it's in a totally different field? Like you said, the auditor doesn't suddenly become a petroleum engineer overnight.
No, they don't. And that's where the auditor needs to obtain a sufficient understanding of the expert's field of expertise.
Sufficient, okay. Not expert level, but sufficient.
Precisely. They need to grasp enough of the key concepts, the principles, the terminology maybe, to effectively define the nature, scope, and objectives of the expert's work.
So they can set the task properly.
Yes. And crucially, so they can evaluate whether the work the expert performed is actually adequate and relevant for the audit's purposes. Again, it doesn't mean the auditor needs to be able to reperform the expert's work.
Right.
But they need that working knowledge to make informed judgments about it.
Okay, so there needs to be this mutual understanding of what needs doing and how it fits into the audit.
Mm.
Is there anything formal, like a document, that lays this all out between the auditor and the expert?
Absolutely. ISA 620 really emphasizes the importance of having a written agreement.
A written agreement.
Yes, between the auditor and the expert. This agreement acts as a clear roadmap for how they'll work together.
What kind of things would be in it?
It would typically outline the specifics of the engagement. So, the nature, scope, and objectives of the expert's work, what exactly are they being asked to do? It would clarify the distinct roles and responsibilities of both the auditor and the expert.
Who does what?
Exactly. It covers how they'll communicate, the form, the content, the timing of the expert's report or findings. And of course, it addresses matters of confidentiality.
That sounds pretty comprehensive. It seems like it would prevent a lot of misunderstandings down the line.
That's definitely the intention. It sets clear expectations for everyone involved.
Okay, so the agreement's in place, the expert does their work, they provide their findings, maybe a report. What does the auditor do with that information then? How do they actually judge if it's, good enough for the audit?
Right. This is the evaluation phase for the auditor. They have to critically evaluate the adequacy of the expert's work. The core question is, does it provide sufficient, appropriate audit evidence?
And how do they figure that out?
Well, it involves looking at a few key things. They'll assess the relevance and reasonableness of the expert's findings and conclusions, considering everything else they know about the company and the audit.
Does it make sense in context?
Exactly. If the expert's work relied heavily on significant assumptions or specific methods, maybe a particular valuation model, for instance, the auditor needs to evaluate if those assumptions and methods are themselves reasonable and appropriate in the circumstances.
Okay, check in the foundations.
Precisely. And very importantly, they'll look at the source data the expert used.
The inputs.
Yes. Is that data relevant to what needed to be measured or assessed? Is it complete? Is it accurate? Because, if the underlying data the expert worked with is flawed,
Garbage in, garbage out.
pretty much, then the expert's conclusions might also be unreliable no matter how good the expert is.
So it's really not just taking the expert's report at face value. The auditor still has to apply their own professional skepticism, their own judgment, to the expert's findings, the methods, the data they used.
That's absolutely right. It's an integral part of the audit process, not just an add-on.
Okay. Now, fast forward to the end of the audit. The auditor issues their audit report on the financial statements. Will that report typically mention that an expert was involved? Does the reader, the investor or the lender, get told about this?
Generally, no. The standard rule, according to ISA 620, is that the auditor should not refer to the work of an auditor's expert in the audit report
It should not.
if they are issuing an unmodified opinion. That's what most people think of as a clean audit opinion, meaning the financials are presented fairly.
And why is that? Why keep it quiet, so to speak?
Well, the primary reason is to avoid any implication that the auditor's opinion is somehow less their opinion, or that it's maybe qualified because it relies on the expert.
Yeah.
Mentioning an expert might inadvertently seem like it dilutes the auditor's own responsibility for the overall opinion.
Right. You don't want to create that impression that the auditor is kind of passing the buck or sharing the load in a way that reduces their accountability.
Exactly. The buck stops with the auditor's signature on the report.
But you did say generally. Does that mean there are situations where the auditor might actually mention using an expert in the report?
Yes, there are specific, quite limited circumstances where a reference might be made.
Such as?
It could happen if a specific law or regulation actually requires the auditor to make such a reference. That's rare, but possible.
Okay, if the law says so.
Or, potentially, if the auditor believes it's necessary to refer to the expert's work to properly explain a modified opinion.
A modified opinion, meaning not a clean one.
Right. So if the auditor found material misstatements or couldn't get enough evidence, leading to a qualified opinion or an adverse opinion, for example, they might refer to the expert's work if it's directly relevant to explaining why the opinion is modified.
I see. So it's for clarification in those tricky situations.
Yes, but even then, the standard is very clear. The auditor has to word it very carefully. They must make it absolutely clear that the reference doesn't reduce their own responsibility for the audit opinion itself. The reference is purely explanatory.
Interesting. It really hammers home that point.
Yeah.
The auditor owns that opinion, regardless of who helped gather the evidence.
Absolutely.
Now, I remember seeing in our outline a mention of an appendix in ISA 620. What sort of extra, maybe practical guidance does that offer? Is it just more technical stuff?
The appendix is actually really helpful. It offers some valuable, quite practical considerations that come into play when the auditor is setting up that agreement with their expert.
Okay, related to the agreement.
Yes, it delves into more specific details. Things like, how do you clearly define the nature and scope of the expert's work in practice? How do you ensure the auditor gets the necessary access to relevant records and information the company holds, which the expert might need?
Right, the expert needs data too.
Exactly. And it talks about setting up clear channels and protocols for communication throughout the engagement. How will questions be handled? How often will they check in? It's essentially a practical guide to help make that auditor-expert collaboration as effective and as seamless as possible.
Okay, that sounds useful. So this whole discussion has really, I think, shown a light on how auditors bring in and use expertise from other fields.
Hopefully, yeah.
So for you, our listener, I think the crucial takeaway here is this. Auditors do sometimes rely on specialists in fields outside traditional accounting and auditing. They need to gather important evidence in complex areas.
Mm,
But, and this is the ultimate responsibility for the audit opinion always, always lies squarely with the auditor.
couldn't have said it better.
Understanding this process, how experts are used and evaluated, it should give you a more informed perspective, maybe more confidence when you're interpreting a company's financial statements and the audit report that comes with them.
Exactly. By understanding the role of the auditor's expert, you gain, I think, a deeper appreciation for the complexities that can hide behind the numbers in financial reporting,
Yeah.
and also the various layers of assurance and checking that go into a proper audit. It's another piece of that puzzle that helps you form a more complete picture of a company's financial health and the reliability of its reporting.
Well put. And on that note, here's something maybe to mull over after listening.
Mhm.
Considering just how much specialized knowledge impacts business and finance today. I mean, think about areas like AI, biotech, complex environmental issues, even really niche manufacturing processes.
Yeah, the list is growing.
What other fields might you logically expect auditors to increasingly rely on experts from in the future? And maybe think about why understanding that reliance might become even more critical as you try to really dig into the information companies are presenting.
That's a great question to ponder.
Definitely something to think about. Thanks for joining us for this deep dive.